Yesterday I was unable to upload a video. I was having some technical difficulties, but today I am back up and running. I'm excited to talk about what happened the last 2 days. I'll go over my day trades for yesterday and today, but I want to start on the daily chart. You're going to see I have the Ichimoku cloud pulled up. Cloud is red and the price has broken out and broken below that lower level on the cloud. This is a bearish breakout of the cloud. You can see yesterday the price did push out down below, but ultimately closed within the cloud. And this depends on which trading platform you're using. I think Oblong Japan was using TradingView, and the close yesterday was outside of the cloud on his charts, but on my charts it's not. So we didn't really discuss what was going on there too much, but you know, we're retail, so we get the shit data. Nonetheless, I'm pretty sure wherever you look now, that candle has closed outside of the cloud. I've been talking about a level of support and resistance at around $14 to $15, and it's in this pink zone. Some people might call this a demand zone, a liquidity zone. What do I call it? Support and resistance. That's all it is. You can see the price does not like to hang out here at all. So I'm expecting one of two things to occur. Either the price continues to bounce and we start to make a bullish reversal. Yeah, we start to make a bullish reversal. Listen to that. That's me saying that. This is an opportunity to start making a bullish reversal. However, though it is an opportunity, I still think room for more downside. And it wouldn't surprise me if the price leapt over this area. Just huge dump. Huge dump. Wouldn't surprise me in a bit. I think that the economic data we got today was bad. I think that the markets rallied on it because it may appear that the Fed might be a little less hawkish because of the, contraction of the economy. I don't think so. I think the time to, I don't think so. That's all speculation, but I don't like to talk about that too much because it really is all speculation. What do I know? I'm just a retail trader. The data I have is terrible. So I use chart analysis. This is the best information I can give myself, is my own analysis based on Bulkowski's expert opinion here. Now let's talk about this candlestick pattern. You can see it's got very long tail, it's got a pretty long wick, and this looks like it would be a doji, but the open and the close are about 5 cents apart, so it's not a true doji. It's close, it's true, but I think we're probably looking at a rickshaw man. I have that page pulled up on the right from the patternSite.com. This is Bulkowski's website. He says the rickshaw man is similar to a high wave candle, except that the body is a doji. A doji is a candle where the opening and closing prices are within a few pennies of each other. The rickshaw man has a tall upper and lower shadows and a body near the middle of the candlestick line. Candle theory says that the behavior of a rickshaw man is indecision. And he says, I don't know about that. That's a joke. His tests show that it acts as a continuation pattern 51% of the time, which is about random. Thus, reality agrees with theory. And Bulkowski's always doing that. He's taking the assumption of like what is a doji candle, and you can even see on his page that the bullish doji is a continuation pattern more likely than a reversal pattern. And that was true on last week's candle. And you can go check out those videos too. I think the thumbnail is actually that bullish doji, so easy to find that. Nonetheless, here we go. So we have an agreement here between the analysis and the theory that the rickshaw man is indecision. And I think that's really what we're seeing. We had the price come down, hit hard against that level of support and resistance, and bounce up. Not surprising to see that bounce. Whether that bounce develops into a big bullish trend is another thing, and we haven't seen it happen yet. It's way too early to start thinking bullishly, I think. The RSI is still well below 50. Volume is still low. Implied volatility? Eep. It's not that. This is looking steady, stable, comfortable right here at 1560. If the price continues to drop, I expect the implied volatility to drop as well until we get into this pink zone. I think crossing this pink zone would cause that big spike in implied volatility, which I hope to see because, well, my analysis is bearish. I'm also holding some puts. So let's talk about what I did the last couple of days really quickly. I'm going to open up the 1 minute chart and try to keep this down to 6 minutes long because I see that's my average viewer's attention span, or I don't know, not attention span, but that's how long people watch these videos, is for 6 minutes. So let's remove the cloud really quickly, apply, okay, and let's pull up the right drawing set, which is not. These names are so dumb. Like fun, like what was that? But it turned into my day trading chart. Let's talk about yesterday first because I missed yesterday's video. You can see there was a rally in the morning. I entered into some puts right about here, and the price continued to move higher, which was a little gut wrenching. But there was a massive reversal. Boom and boom! Look at this. Sure enough, we had a measured move down here form with a corrective phase ending at around 1575, and then the price tanked lower, but stopped short of a theoretical price target. And this is a sign of weakness in the downtrend. So I went ahead and closed out my puts. And I did pretty well. I bought those for $31 a contract and I sold them for $42. So that gave me some play money, which I immediately put to use. And you can see I bought some more puts here. $14 puts for $8 and $14.50 puts for $21. I ended up selling those today. You can see that as yesterday progressed, there was just like this. It was an uptrend. It wasn't necessarily super bullish. It just looked like a corrective phase, and then as the price encountered the downtrend again, it pulled down. Now this downtrend wasn't drawn here yesterday because this low of 1470 hadn't been put in yet. So the downtrend actually was broken out, and the price did close above it at that time. And sure enough, the price at open rushed back down underneath that downtrend and broke this corrective uptrend that we had set yesterday. And as the price fell, I wasn't even sitting here. I had to go to a meeting, and so I was actually like in a room with people. Every once in a while, I'll pop up my phone, I'd look at the chart. It's like, oh my god, it's going down. And my phone was at 10% battery, and the meeting just ended when I saw this corrective phase starting, and so I bailed out of those the 1450 puts that I purchased yesterday. And my record keeping here is poor, but I exited puts along here, and then I bought another put as this half staff formation formed. And you can see this actually happened to play out perfectly. This is the move up, a half staff flag, and then the push higher led right to 1590, and the price did eventually reach that, breaking out and above the downtrend that we've had for the last, well, since those 3 identical crows from last week. So the close came down though, and boom, it's below that uptrend, so technically trendless. AMC, end of the day, technically trendless, and it's a rickshaw, man. It's indecision, and that is exactly what the chart says. Indecision. So, it's far too early to say bullish reversal, and technical analysis is always going to favor the prevailing trend, which is currently bearish. It's currently down. Now I'm going to zoom out into the 15-minute time frame on a blank chart. Not a blank chart. It's actually where I keep my 15-minute chart drawings. Currently, I'm sporting a right angle descending broadening formation, or yeah, I guess it's a formation. I have it as a wedge W here, but that's not right. So here's the thing. This was a great pattern, an absolutely great pattern. It's very clean. We had all the touch points. It's perfect. It occurred. It started right as the price broke out of that uptrend that led to $34, and the last high was just after the downtrend from $34. So here's what I saw happen. I saw this partial rise form up, and boom, I said this is probably a bear flag in here, and sure enough it was. And you can see the theoretical performance, that second leg didn't reach 1383 before being rejected and pushed upward, and it came within, but that happened at pennies within 1461, which was the target for the pattern. So what's this mean? This means that there's probably going to be a little corrective trend here. It might be a couple of days. It really could be a couple of days, or we see a massive sell-off and this target is reached tomorrow. That could happen. That could still happen. I want to start to draw a downtrend on this chart. I think I'm gonna start working with this chart more than any of my other charts. It's really good. I really like this chart. It's great. So I'm gonna take that high, go to today's low, and then not overlap the price at any point between there and that low. Which, if there is right here, there's a little wick. Maybe you can see it. If I don't overlap that wick, the price did not reach the downtrend. If I cut that wick off, which I want to do, it's going to show that the price ended its rally at the downtrend. Yes, the price respected a downtrend at the close, which is why I'm expecting a sell-off going into tomorrow. I don't put a lot of weight into after hours, but the price is slumping. Yeah, you can see it right here. That looks like resistance. And what was yesterday's close, right? I mean, we were within 21 cents of yesterday's close. So, I mean, honestly, this really is just indecision. That's all it is. It does look like a nice little bottom, maybe, but it doesn't necessarily have any chart pattern to it. If anything, it would be a rounding bottom, but on a 1 minute chart, I'm not going to call that. This really could just be part of a downward channel. Watch this. I'm going to duplicate this downtrend, and I'm going to pull it down just to right there. Yeah, right there. I'm going to use that tail, this bottom, and then cut those pipes out as if they're a bottoming pattern below the trend. And what do we get? Let me just pull it up. Okay, that's not useful. That looks better. This is a clean downtrend. This is a clean downtrend. And today, the price rammed up against the top of that channel and stopped. So, Friday sell-off, boom, puts us back into the channel with some momentum. And yeah, that 1383 target could come into play, which would put my $14 puts into the money, and I'd make a ton of money on that. So, if you look at my board here, I have my trades up. They're doing pretty well. I did discover today, well, there is a discrepancy between the amount of cash I have in my account and the my daily trading log, and that's because when I'm keeping track of my contracts I buy and sell, I'm using the value of the contract minus fees. So it costs me 65 cents to trade a contract, or to buy or to sell a contract. So every trade is going to have $1.30 of loss baked into it. So what that does when you make as many trades as I do is it adds up really quick, really quick. You know, my daily trading log I think is up at like $320. I started with 165, so I'm getting close to that 200% gains in the last 4 weeks. But because I'm paying so much in commissions and fees, it's about it's not 200%. Like my cash balance is currently $240, not counting the open contracts I have. And you know, the difference between what I have and what it should be, it's like $60 or $80. And that's just because of the number of contracts I've been trading. And it's not per trade. If I buy 4 of the same contracts at once, I get to pay the 65-cent fee 4 times. So this is another one of those challenges that I face. I'm using a cash account with a small amount of cash, and the cost is relatively large compared to the amount I can trade, which hurts, but it's a slow grind, and I accept that. I'm doing very well. I think that this chart is moving per the analysis very, very cleanly. And really quick to finish off, I want to look at something else. I want to look at the IWM, because today I saw something that I have not seen yet, and that is this monstrosity. And then it just floated up there. Like a cloud in the wind. Incredible. Like the RSI, what was it at? 96. Wild. So the IWM and SPY, they both appear to be wanting to set a bottom reversal and push upward, which Ron Walker is saying could happen, and I like that guy. That guy's good. Great analysis. Very great analysis. So, you know, I haven't looked at this chart in a long time, so I'm just going to be like, hey, look, what's that? You know what it is. That's a measured move down. This is what a reversal candle looks like, okay? This is a reversal candle. That looks reversally. Absolutely. Let's go to SPY. Yeah, that looks good. So, and we're turning when the RSI is low. Honestly, if there is a bounce higher, that's cool, but also I'm always suspicious because, you know, candles can be deceiving. Let's see where we're at in our retracements here. That's too many lines, isn't it? We can't see all that through all that yellow. 61.8. Yep, right there. So, it could just be a measured move down, and I'm serious, like, this would be such a bull trap. It'd be so nasty, it'd be sick. So I'm just gonna trade AMC, just trading per my analysis. I'm doing really well. And I don't think I have anything else I want to show in this video. We're good. I mean, the RSI here has still got a lot of room to move downwards. And I mean, I think we are in an increasing volume trend, are we not? Higher, higher, higher. And the price is closing lower, lower, lower. We just exited the cloud. Going to probably hop, skip, and jump over a large support and resistance area. That makes sense to me. And then if it bounces back up, that makes sense. Happy trading.